Okay, thank you for joining us for Insurance for Design Professionals. This is actually a conversation between Kevin Collins, who has about 30 years experience working in professional liability insurance, and me. I'm Frank Musica, and I work in risk management here. I've worked with a number of small and large AE firms over the years, and now I do practice and management assistance for our policyholders in the Schneider program with CNA. This program is really in two parts. One part of it we'll talk about professional liability insurance, and at the end we'll talk a little bit about cyber liability coverage, which is a coverage that if firms do not already have, probably will be acquiring shortly because you really need it in the practice environment we're in now. For professional liability insurance, the Victor O'Schneider program has expertise in professional liability insurance since 1956, when we started a program for the American Institute of Architects and the National Society of Professional Engineers. That program was picked up by CNA in the 50s, and CNA has been working with us on that program ever since. Again, we provide other insurance coverages, including cyber liability insurance coverage. Now, we will not go into detail on most of these coverages. There's a lot more information on our website, again, schneider.com/School of Risk Management. You can obtain more information through the website, and we encourage you to work with an independent insurance broker, someone who understands these coverages, who is not tied to a specific company, and can help you understand how policies work, what policy differences are, and what coverages you need for the kind of practice you're in. Now, a major risk for any professional practitioner, whether you're a doctor, a lawyer, an architect, an engineer, or surveyor, is that the harm, a cost, loss, or damage will be caused by your negligent performance of professional services. But practitioners have many other exposures. And professional liability should not be thought of as covering all of your risks. It is a very specific coverage. As one court has said, and I think others have said similar things, is that professional liability insurance only covers you if the underlying cause of action was based on your performance of professional services, your wrongful act or omission when you're actually performing professional services, and not in your negligence or in your wrongful act when you're operating a business which happens to perform professional services. Those are business risks that every practitioner, again, whether you're a professional or whether you're a general business, those are business risks that you have, and you need to cover it in some other way. Now, what does professional liability insurance cover? Well, for your professional services, it's very broad coverage. It covers just about anything you do as a design professional, anything that's construction related that you do as a professional service. It also covers you for your vicarious liability for those providing professional services through you. It doesn't cover them, it covers you, but you have vicarious liability, in some cases coordination liability, for other professionals, and your professional policy, professional liability insurance policy covers you in that way. And note in here, the highlighted part says, services performed for others. Professional liability insurance doesn't pay you for harm. It pays on your behalf for harm caused by the services you perform for others.
One here thing, Frank, is just in the fact of the listing. Frank mentioned the vicarious liability, and oftentimes in talking with firms, there's a conversation about whether or not these services are performed in-house by the firm themselves or through a sub-consulting arrangement where they're bringing in that level of expertise as well. An important part there is just to recognize that our intent is to make sure that, whether you're providing those services in-house or consulting to other firms, is you do have coverage under the policy. And we're also recognizing that practice continues. So for instance, material transparency consulting is one area that's not specifically listed here, which is an emerging trend that we're seeing. So those last two words, technical consultant, is geared to deal with emerging trends or consulting areas that we may not have thought of or that come into the practice. The goal being that that is a very wide brush to be able to consider that coverage under policy. So really the distinction here is just a firm's consideration as to whether or not they want to hire for that expertise or provide that service. But either way, there's coverage available for that element.
And to continue with what it covers your wrongful act, which is an error, an omission, or other act that causes liability in the performance of professional services. Now, this policy never mentions the word negligence. It doesn't have to, because under the law, liability in the performance of professional services doesn't mean breach of contract. It doesn't mean other harm that you may cause, breach of warranty, for instance. It means your harm caused by your negligence in the performance of professional services. That's how liability in the performance of professional services is established. In every jury instruction in all 56 jurisdictions, it describes liability in the performance of professional services as not meeting the standard of care of being negligent. Now, who does it cover? Well, it covers basically everyone working in your firm, and including people who used to work in your firm, for their services that they performed in their scope of duties for your firm. Even if an employee leaves the firm, if the firm continues its professional liability insurance coverage, then the coverage is provided for any claims against that employee as part of the defense of the firm. So even if that employee is no longer employed by the firm, if they were involved in a negligent action while working for that firm, the coverage still applies.
One point here, Frank, is just to recognize our goal is, in combination with the coverage, is on the declaration page. That's the front page of your policy that confirms name, address, policy term, limits, deductible, etc. Is under the declaration page or by separate endorsement, any entity that you're using to contract through. For some firms, it may be a continuation where you have predecessor firms that over the years were the contracting entity, or you may be a firm that acquires or merges with other firms that now comes under your umbrella for coverage. So the important part there is to make sure that all of those firm names, predecessor firms or otherwise, are included on the declaration page, and then this allows the definition of who's covered to cascade down. Because again, the goal is anybody that's rendering services on behalf of a firm or entity listed on the policy, that's what we want to be able to ensure. And I find also with firms, individuals leaving within the firm, that this is an area of discussion and consideration. So to Frank's point, you do want to make sure that the policy is enforced, because for a claims-made policy, if that claim is not enforced, then it's as if the policy was never in place. The policy has to be enforced at the time that the claim is made.
And Kevin, you mentioned the deck page. One of the things that professional service firms often have to do is really jump through different hoops in different states. So you may practice in one state, and a state over may require you to have your practice in a slightly different format. You may have to have a different name in another state. You may have to have a slightly different organization structure in another state. So it's important that your policy lists those variations as well, so there's no doubt that you're covered for the services you're providing in different states under slightly different organizational setups. Now, what doesn't it cover? There's some very specific contractual liability exclusions. And one of them is your alleged liability under an oral or written contract or agreement. It mentions express warranties and guarantees, but it's not limited to that. It really discusses contractual liability in general. And why not? Because insurance is based on reasonable expectations. We know what the law requires of you as a professional. And that's how we're pricing your services, right? We know what the risk of your being negligent is. We have 60 plus years of experience in that. We look at those statistics all the time. But if you're making express warranties or guarantees or other contractual commitments, we don't know what those are. We don't evaluate every contract you sign and determine your rate based on every contract you sign. So we're basing the insurance cost and the coverage on your normal legal liability as a professional. So that's why obligations assumed by contract are excluded. It also doesn't cover the liability of others you assume under an oral or written contract or agreement. And you wonder, wait, what does that really mean? Well, that means that indemnities or defense and indemnity obligations, which you will see in many, many contracts, if you're assuming that obligation, right, that you're assuming a promise to pay for the liability of others. So that's a contractual commitment which is not required by law and which would not be covered by professional liability insurance because it is a contractual commitment. Except that there's an exception to the exclusion, because even though the exclusion says we don't cover your contract, we cover your services, the exception is, but if the exclusion really focuses on something where you would have had liability anyway, in the absence of that contract you signed or in the absence of that specific provision, the exclusion does not apply. And that basically restores coverage in a breach of contract situation and responsibility for the liability of others if they are damages, if they are costs, losses, harm caused by your failure to meet the standard of care for your services. Right? So in other words, we are covering you for your services and we are paying on your behalf if those services are negligently provided, if you have liability in the performance of your professional services, and that causes harm, right? So if you do not meet the standard of care and you cause harm, that's what the coverage is there for.
And wouldn't you say, Frank, from the standpoint of what you see kind of in the industry or from on most cases, is when there's a perception of an error or a claim is made, that plaintiff's counsel or the owner is going to try to pin a lot of different issues, whether it's on the design professional or the consultants. So within that, there could be components that speak directly to negligence and others that may speak outside of that, including defense or indemnity obligation that's there. So a couple things. One is that the duty to defend is broader than the duty to indemnify. So if there's a covered allegation within a claim, that target would allow for you for continuation of defense and the handling of the claim. And from a practical matter, with good contract language, especially indemnification language that ties the indemnity to negligence, it allows you to protect the basis of recovery by the owner to the insurance coverage, as Frank mentioned, and also allows perhaps the defense of the owner to be adjudicated at the end to say if they incurred additional defense on the basis of negligence performed in your professional services, that may be a way to resolve that particular issue.
Because those would be damages to the client caused by your negligence. That's right. And as Kevin said, no knowledgeable lawyer would allege harm without trying to pull in as many causes of action as they can. Breach of contract, breach of warranty, even if there's no warranty language in the contract, and negligent performance or your normal tort law liability. And they do that for negotiation purposes, They often do that to really cover their bases. And remember, if a lawyer makes the wrong kind of an allegation and a claim against you, that lawyer could be held to have a malpractice suit against it. So they make it as broad as possible. That's what the legal system requires. And if there is evidence of your negligent performance causing harm, that's where the professional liability policy is going to step in and defend you. And, as Kevin said, there are basically two elements of coverage. The defense, which is very, very broad. It doesn't matter if a specious claim or whatever, we're going to defend you. And then there's the indemnity payment. And again, that is a payment above your deductible that you are legally obligated to pay as a result of your negligent performance, of your wrongful act. And we will mention pollution incident coverage a little bit later in the program, because the policy also includes some pollution coverage as well. Now, there are two things about the policy, the CNA policy, which I think really adds value to it. And part of it is that it just doesn't cover a claim. The program really exists to help you defend against the possibility of a claim. So, Kevin, can you explain a little bit about the difference between a circumstance reporting and a claim reporting?
Yeah. So as people can see on the screen, there's a slight delineation in the definition. So one, under claim, a demand for money or services, naming you and alleging a wrongful act or pollution incident, essentially negligence or something that happened on the pollution side at the project. So again, a demand for money or services versus an event. So it's an element of what that gets to. And so from a practical standpoint, I'm sure as a client, you get those fortuitous calls from the owners, generally on maybe Thursday afternoon after hours, to say, congratulations, I'd love to have you in my office on Friday morning to discuss the project. And then from your standpoint, you may know, thinking about that, gosh, this project's a little bit over budget. There's been some delays on this. The owner has not specifically asked us for money or for additional services on the project, but I'm concerned that this meeting may go the wrong way. That would be easily a circumstance that you could report to CNA as something that I'm concerned about that may eventually lead to a claim. And by doing so, and by CNA reviewing and accepting that, that may allow them to effect what's called free pre-claims assistance under the policy. That way, if we needed to have an attorney attend the meeting with you to protect your interests as part of that conversation, or maybe simple as having some conversation and guidance from the CNA claims professional so that the firm goes in with eyes wide open as to what may happen in the meeting and what to look for, versus the client calling you on Thursday afternoon and saying, I'm sending you an email and there's cost overruns on this project that we believe were due to your professional negligence in the performance of services, and we're looking for you to make pay on those corrections or other element. That situation would clearly be a claim. The other distinction there too is under the policy, if you receive a claim, that has to be reported under the policy with notice to CNA. Circumstance reporting is optional. That is not a requirement, and essentially is there for your protection, because we know that having you get us involved sooner in the process, we know over time leads to better results and may prevent you from actually having a claim made against you. But there is no penalty for not reporting a circumstance.
And let me ask you one question about reporting a circumstance, because I know a lot of insured firms, and whether you're insured in professional liability insurance or whether you have auto insurance, sometimes you don't want to get the insurance company involved. And obviously, if there's a claim against you and there's defense costs and there's an indemnity payment on your behalf, that's going to affect the amount you're going to pay for insurance in the future. But what about if you're reporting a circumstance? Does that have an impact on the amount we're going to charge a firm in the future.
Right. And the simple answer to that is no. So from a underwriting standpoint, there's two things. One is we're sophisticated enough that when we see loss experience for a firm, there's a delineation of firms that have reported a circumstance versus a claim. So we can delineate those two pieces and separate them from the process. If you report a circumstance to CNA or multiple circumstances to CNA, that does not count against your loss ratio or your experience record, nor from a pricing standpoint on the underwriting side. Our goal and our real wish from the firm is, one, it's voluntary, and two, that we want the firm to be as proactive as possible to report those circumstances to CNA. I love to see firms that consistently report issues when they get to the proper elevation, because that helps to reinforce the fact that you've got a QA/QC procedure that helps to track and identify those pieces. And we know over time that circumstances reported to CNA generally can end up better or more effective, or may not result in a claim. So the short answer is there's not a premium impact, Frank, but I know that is a concern in the industry. That you don't want to know your claim specialist by their first name.
Okay, so in summary, CNA policyholders are encouraged to report situations that the policyholder reasonably expects could develop into a professional liability claim, so that CNA can provide assistance to really head off the possible claim. Now, let's talk a little bit about pollution incident liability coverage. I know that the professional liability coverage is not a true pollution liability coverage. Pollution liability coverage are extensive policies that can cover all kinds of things. But this provides a benefit to policyholders in their normal practice. And could you explain in more detail how this really provides a real benefit to policyholders?
Sure. And I'll also set this up that I think from the standpoint of contract language or owners, more emphasis around some of these individual coverages, that we see this question come up more with both the brokerage and the firm community as to how pollution incident liability and pollution coverage is addressed, because that's now being drawn out in insurance requirements for contracts more specifically. So to step back from a historical perspective, initially pollution coverage was embedded within a general liability policy and not within the professional liability coverage. But in the 90s, we developed a recognition and policy forms that introduced the concept of pollution incident liability. And our goal there was to recognize that the fact that you're providing construction administration services or physically at the site, or hiring individuals that may be physically at the site, that there's a possibility that a pollution incident could be created not by the performance of your professional services, but by your actions and activities at the site. So for instance, you could have a situation where material at the site which is contaminated is removed from the location. And as a civil engineer, you're responsible for site and coordination. And the allegation from the owner will be that the negligence performance of your professional services allowed for the material in the soil to be not treated properly and cause damage to a third party next door. In another situation, you could have a project manager walking the site who kicks a can of cleanser onto an open waterway that flows to an adjacent property site, causing damage. And in that situation, the allegation is not that you're performing professional services, but the activity of walking the site and being part of the construction administration services led to the fact that you kicked the can of turpentine into the open waterway. That's where pollution incident liability comes into play. It took the traditional coverage that was in the general liability policy and said situations where your activities cause pollution at the project location are now captured within the professional liability policy. And so where we talk about contractually assumed liability, what we're covering is still resulting from the professional services that you're providing. So whether the services you're providing and you kick the can of turpentine at the location, or if you suddenly get involved with situations where the pollution is due to transportation of the pollutant off-site, or vicarious exposure for disposal at a qualified non-owned site, or even bringing materials back to your location that result in pollution, are all things covered under the existing policy. From the standpoint of a traditional pollution policy, though, that really gets into services. So if you start to take on a greater role with a design build or single point responsibility contract, where some of the assumed liability are for activities that involve construction or installation, or you as a firm are taking on that role, that may be something where you're looking to provide a separate policy, a pollution policy that Frank's talking about. Because this policy is not designed to extend fully to all of the services that may be part of a contractual, being a contractor. But at the same time, that you still have coverage for, your activities at the site.
All right, thank you. Now, Kevin mentioned design build, and we see an increasing number of our policyholders more active in design build. Obviously, owners seem to like the design build delivery system. Often, our policyholders are subcontractors providing professional services to a client who happens to be a design builder. But in some cases, our policyholders are actually taking the lead in design build. And one of the things that I think those who take the lead in design build need to have is a policy like the CNA policy that has rectification expense coverage. And would you explain a little bit more about how that works with our firms that are doing design build?
Sure. So in situations where the firm is taking responsibility for both design and construction, and that can look many different ways. So one would be a situation where the firm itself is taking on an in-house role for both design and construction of the facility, or that they're going to joint venture in equal partnership with another contractor to provide that service, or if the design professional is going to hire the contractor for the construction. So from the owner's perspective, it's essentially a single point responsibility type of agreement where they're looking for the design professional or the design build team to both design and build the project. In that unique situation, as you start to take control of the project for site development, design, and construction, you're in the best position to identify what may be design defects at the site. So one element may be a miscalculation of the structural load of a piling. So as you start to build a facility, you're recognizing that the piling or the structural piece may not hold the building, and it's going to have to be concreted out, blasted out, and redesigned for that particular piece. And you're in control of the project. And so what rectification coverage does is it allows you direct access to CNA to advise them of a defect in the design that needs to be rectified to be able to be continued. Because in lieu of that, as Frank said, a claim is a demand for money or service by another party alleging that you were negligent. So instead of going to the owner and bringing them into this mix, rectification expense coverage brings you directly on a first party basis to CNA so that you can report the situation and the problem as a design defect. CNA would then review that and agree with you that in the absence of a third party making a claim, this would be a claim covered under the policy, and now can work with you on a direct basis to mitigate the loss and correct the error. So in that situation, the goal is to rectify the problem. It doesn't provide betterment or other things outside of the direct damages to correct the situation, but allows a convenient way to engage CNA as a carrier for resolution sooner in the process so that it does not impact as much the design timeline or the construction timeline to the project, and allows the owner to get a project complete and effective for the long term.
But there are some limitations on design build in the professional liability policies, right? And, I think we have to talk about the percentage. Obviously, firms with over 20% percent of their billings in design build probably don't fit into the design professionals program. So there's a separate program for those doing a lot of design build, and that's in our contractors' professional liability insurance program. Because remember, contractors doing design build have to have professional liability insurance as well. And there's always a concern about the amount of residential design build that's being done. And firms that do more than 25% really do have a problem getting professional liability insurance coverage. So even in the contractor's professional liability insurance program, there's a 25% cap on residential. But I think for most firms, when a design firm takes the prime design build contract, it can count on rectification coverage that will provide the mitigation of loss payments for design defects that the firm causes. And that puts them really in a much better position to work on design build and not just be a subcontractor.
And I think also, Frank, from a practical standpoint, oftentimes firms are delineated as, contractor versus design professional. So on the percentage basis of design build, we are definitely in support of design professionals taking on that role if they feel qualified and appropriate to do so. And so a lot of the firms not necessarily don't dabble, they may have a very focus on that, but the percentage of revenue varies but tends to be small. So our goal is to provide that broad coverage and include that design professional in the program, recognizing that the design build exposure is fairly ancillary to the overall exposure. But if they want to get more heavily involved on the contractor side as a percentage of revenues, then we do have the contractors form that also includes rectification coverage in that form as well. So you have consistency of coverage regardless of where you qualify.
Right. Let's move on to sale of services and goods. I think the policy really has enhanced coverage for some elements of the sale and distribution of goods. I think these are the examples, and you might want to speak to these.
Yeah, sure. So again, a couple of things in utilizing, whether it's, we go back, a decade and more now around building information modeling or other systems that are utilized in the performance of professional services. Some of the control systems that civil engineers may use for components working with wastewater facilities, et cetera. Obviously, technology is driving a lot of the design and need for facilities today. So this carve out is really designed to deal with that definition, to know that technology-based services, things that you're doing to help drive technology, whether it's your control systems or otherwise, that is something that is covered under the policy. And you can see that on the second bullet with integration of custom software as part of your professional services. We recognize that you may need to take off-the-shelf software to incorporate into the product or into the system, but then you would modify that specifically for the owner and its intended purposes for that project. Our piece here is just to recognize that if a firm wanted to be an Apple or a Microsoft, where they were selling shrink-wrapped, software to millions of people, that's not the intent of this coverage. But then as we expanded coverage as well, and looking more at the interior design exposure, furniture, furnishings, and equipment are things that interior designers do all the time. Architectural firms embedded with interior design are providing that service as well. So this proactively confirms that, furniture and furnishings and equipment that are provided as part of their professional services are also, part of the coverage.
Okay. So this really does not address the product liability exposures faced, for instance, by a manufacturer who puts a product into the stream of commerce, but really is focused on those special services that develop technological goods or FF&E specific to a project. Okay, now let's talk about one of my favorite parts. And there are foreign jurisdictions that do not operate a legal system that assigns liability based on negligence. And as more and more of our policyholders work worldwide, they have to be concerned about that. And I think some policies that are based solely on negligence and have the word negligence in the policy really would not provide coverage. But with the CNA policy, there is professional liability coverage in those jurisdictions that do not assign liability based on negligence. Um, uh, Negligence does not have to be proven for the coverage to attach. And you might mention that, and then we can talk about some of these other attributes of the policy that provide broad coverage.
Sure. So just to wrap up Frank's conversation, we spent a lot of time kind of talking through the contractual liability exclusion and the carve out in that particular piece. But this really addresses, as Frank said, that a multitude of countries has no basis as standard of care, under their law, that really what you agree to in contract with the owner drives the liability that you would have when that jurisdiction is in that country. And we wanted to make sure we proactively address that in the policy to allow you to effectively practice overseas in whatever capacity that you wish to do. And as I think as we continue forward, there's also some efficiencies that I think provide some sleep coverage. So the idea of full prior acts coverage. So just to step back, what full prior acts coverage deals with is the aspect of when you completed the services on the project, is that part of the policy? So if you think about it, there's really two wheels. So one is when the claim is made. So when the claim is made by the client against you, CNA claims will determine that date relative to the policy period that was currently in force. So the claim has to be made during a current policy period. And then the secondary element becomes, was the services performed under that project also within the coverage period? So for instance, if you have a new firm and you've never purchased insurance before, there would be a period of time where the coverage would be limited to both claims made or services rendered within the policy period only. There was no coverage back before the inception of the policy. But for firms that have been in the insurance industry and purchasing insurance for a long period of time, or has been with us for a period of time with good loss experience, then the policy extends retroactively to the time that the firm was formed. The retro date issue is important too because there's no limitation on the specific date. Once the firm is on or the entity is listed on the policy, the presumption is whenever that entity was formed or started services, the policy will provide coverage from that day forward. There's no limitation on that date. Oftentimes in the industry, the underwriter or the insurance agent or broker may have a form where there's a retro date, which is a specific date that may be on or maybe after when some of your predecessor firms were formed, and that can present you with some uninsured exposure. I think also philosophically from a claim standpoint, as Frank mentioned, we've been doing this now for over 60 years, is there's a strong comfort level at the claims to help partner with the insured to resolve these effectively. So one is, you have rights that there's not going to be a settlement on your behalf without your informed consent. So a lot of communication back and forth around what's going on in the claim and the best situation. We also don't have a limitation which is called a hammer clause, which would delineate if a claim can be resolved for a certain amount and the decision's not to provide that informed consent, and it's later resolved at a much higher element, insurance companies can say we're only going to pay for the amount that would have been awarded previously. It's called a hammer clause. We do not have that in our policy, which again goes to the fact that it's really around conversation and the handling. Same way to recognize that although it does not happen often, but design professionals could be subject to punitive, exemplary, or other awards. So we're recoverable by law, where it's not ruled against law, the policy can respond to that. Most importantly, we talked a little bit about the specialized services. We expanded that out. There's a multitude of things. Interior design and lead consulting are two areas there. But just recognize that whether it's technical consultant or any one of the other elements, as you need to provide additional specialization to provide effective services to your owner, we're here to be able to address the things that you need to do.
Good, thank you. Now let's talk about reputations because the real value of a firm is often its reputation. And part of that is really how do you protect a firm in a claim situation and what happens when there's some crisis event. So let's talk about the deductible incentive first.
Yeah, so we've added a component for early resolution of a claim that this defines that if a claim is resolved within 180 days after the claim is reported, then there's a deductible incentive in that you would get a credit against your deductible of 50% up to $10,000 for that being resolved. And so what that really does, it's an interesting dynamic because 180 days, why not 190 or 170? So it's essentially an idea that we're giving a gauge of time, 6 months, that if a claim is not in a good position for the client, then it provides the benefit of we know that if it can be resolved effectively and efficiently within that time frame, that there's an ultimate savings overall, both from the standpoint of your limits of liability, perhaps your deductible in and of itself, but definitely the limits within that you purchase under the policy. And we want you to share in the benefit of that early resolution. Similarly, on crisis event coverage, you can see the payment there. It is payment to a public relations firm to counter kind of issues that come up. Within our policy form, a lot of things can happen to trigger that event. It could be the death, the unfortunate death of a key member. It could be a worker site safety or workplace shooting or other things in your building or location. Situations where reputationally people may think you're no longer in business. And so this provides some public relations that you can do. Is again, it's a 50% split of payment for a limited period of time to help get you back on your feet. What I think the best selling point of this is the crisis event coverage actually links to the filing of a claim. And I had a situation many years ago where a client working with an architect, project was going south. There were a lot of issues around that, around possible bankruptcy of the owner and cost overruns or other aspects. And so the architect, our insured, was fired from the project, which subsequently generated a claim for negligent design, cost overruns, et cetera. But separate from releasing them from the contract and getting them off the project, they decided to go to the papers and local media to describe the horrible actions of the architect on that project. And so recognizing of a future claim, that would be a situation where the fact that they reported a claim against the insured might lead to a crisis event to bring a public relations firm to recognize there's potential jury pool or other things there to counterbalance the message of the owner in the industry. So it is kind of a unique coverage and not something that's readily needed every day, but it's good to recognize that there's different dimensions to a claim that we can now address.
And let's briefly talk about some of the policy's supplementary payments, because I think they provide some real benefits to policyholders that are rarely used, but I think can be very meaningful.
Yeah, so Frank mentioned initially when we were talking about the entities listed on the deck page and how some individual states requirement may be that you have to sign the contract as an individual versus an entity and how you're licensed. So if you're put in a situation where the licensing authority in the state is investigating you for violation of conduct rules, then we want to provide this is essentially a supplementary payment of up to $25,000 to assist with defense in that particular piece. Again, it comes up rarely, but just recognizing the nuances of rules and how states are developing and changing, there may be that type of error in the formation that can be addressed. And then also the defendant's reimbursement, $500 per day up to $15,000 maximum, doesn't necessarily recognize the full revenue that you are lost in defense of a claim, but we wanted to recognize that if we need your attendance at trial or in defense or time with an attorney to be able to go through some of those issues, that there's some additional compensation that you can have. And also under the ADA, FHA, and OSHA, Those are, again, to the extent that the government becomes more proactive in filing issues against you for ADA, FHA, and other violations. Again, this provides some additional costs for defense. And I guess we don't, a knock on wood, but we don't see that as much. But in the past, we have seen it with ADA issues through the Department of Justice, specifically around arenas or theaters where line of sight issues came into play. And occasionally, obviously, you can see it with OSHA actions as well.
Great. And one more issue, and that we know that firms often transition, whether it's merging, whether it's buying a firm, whether it's the baby boomers are winding down the firm. So can you just briefly talk about the how that's handled and what extended reporting periods are available?
Yeah, I mean, the first thing that I would say is if you're a firm with our program is contact your insurance advisor and talk through it, because this is an area that I consistently see questions around. And when you get to the solutions, there are as many solutions as there are situations. One size does not necessarily fit all, depending upon how you're winding that down or activating, because we do see with mergers, acquisitions, nuances within the sales agreement as to how that's going to be done. Sometimes the acquiring firm may want to purchase the prior acts coverage for that firm that's being acquired and address it there, or they may ask you to purchase an extended reporting period to address those concerns, or somewhere in between. So if you're involved with particular purchase, sales agreement, merger, or other consideration, engage your insurance carrier and your insurance professional as soon as possible, because there's a lot of options that we might be able to craft around the situation that's driving how you want to operate. In a more generic way, for firms that are more getting towards retirement or just winding down the firm, there's always the element of the statute of limitations and repose and a time frame that you could be brought into action for claim arising from services you performed prior to your retirement or the dissolution of the firm. So the policy today provides optional extended reporting period, which could be 1, 3, and 5 years. And that's traditional in the insurance industry. I think most carriers address that in some capacity. There's often specific wording around how that premium is calculated with some level of percentage of the prior year coverage. What I want to highlight here is that we've extended coverage under our 2014 form to address other unfortunate situations that may come up. So if an individual within the firm dies or has a permanent disability that results in the winding down of the firm cannot continue to practice, then we have an endorsement called the death or disability endorsement, which would provide an automatic ERP period for the time of the disability or for the period of time through resolution of the decedent's estate. For the potential liability and claims reported for the services rendered previously. An important part here is that you don't have to activate this coverage if the intent of the firm is to continue to practice and press on without that individual, because again, they're covered individually within the definition of the base policy. This is really set to address where either the death of the principal or the permanent disability of the individual is driving the stopping of the firm from practicing services in and of itself. And it's fairly easy to activate that coverage. You contact your insurance professional, and we either need to have a doctor's note that confirms the condition of the permanent disability or certificate of death that confirms the decedent's passing. For more general firms and firms that have been with us for over 10 years, we also have extended ERP options, which may extend up to 10 years. With purchase of the endorsement. So it's not perfect in all states, but a lot of states have statute of limitation or repose requirements within 10 years or up to 10 years, and it may meet that requirement, and that's something that's available for 250% of the prior policy premium. So there's a lot of options. Again, the important part is talk to your insurance professional early, engage us in the conversation so we can craft the right solution for you.
Great, thank you. Now let's talk about some of the professional liability issues we see when we do contract reviews. We review about 1,400 contracts a year for our policyholders, and we see a number of things that come up. Um, you know, often a client will want to be named as an additional insured, and they figure that by naming a client as an additional insured on the firm's professional liability insurance policy, the policy would provide a defense for the client and pay for harm caused by the client's negligence. That's false. Clients cannot be named as additional insured and added to the policy. They don't provide the services. And if we were to add them, actually it might be to our policyholders' benefits because insureds cannot insure through other insureds. So if they were named, they would not be able to recover for any negligence on the part of the policyholder. It doesn't pay to an insured. We also see demands for contractual liability coverage. And contractual liability coverage is something that a contractor's CPO policy would have. But that's not part of a professional liability insurance policy. A firm cannot, for instance, by endorsement to the policy, extend the policy's coverage to a contractually assumed defense and indemnity obligation. The law states what the indemnity obligations are. That's what the policy covers. If they're based on the firm's negligent performance of professional service, they're going to be covered. If they're not within the professional liability insurance policy, and you can't get an endorsement to extend that. We also see questions about certificates of insurance all the time. And you really should know that a firm's insurance broker can arrange for notice, and a client can be notified in advance if the policy is being canceled by the firm or by the insurer, or if the insurer will not renew the policy. But that notice does not cover a lot of other things that many owners think. They often want notice for a material change in a policy. We have no idea what that is. That cannot trigger a notice. They often want notice of a reduction in the coverage of the policy. And that happens every time a claim reserve is set up or a claim payment is made, and you can't delay those actions while you give notice. So there are some limits to what notice can be provided. And again, work with your insurance advisor to get the proper notice to your client. On waiver of subrogation issues, subrogation rights really give us the ability to take your role and to go after other parties on your behalf. For instance, if you have a subconsultant who causes the damage and you end up paying on behalf of that subconsultant, subrogation rights would give us the ability to recover from that subconsultant on your behalf. And the policy as it is written now automatically waives subrogation rights against the client if the contract with that client says that has to be part of it. But it doesn't waive subrogation rights against other parties. So if you're a subcontractor to a design builder, the design builder may say, we want you to waive subrogation rights against us and against the owner of the project. That is not done automatically, and it cannot be done by endorsement. But actually, practically speaking, it's not really necessary because our rights really go against the party you're in contract with. And waiving those rights is something that can be automatically done through the policy. Firms are often asked to continue coverage, for any number of years, and that's fine. You can make an agreement to carry coverage if it's something that you financially can do, but we can't commit beyond the term of the policy. We can't agree that you will be insured for the next 10 years with us because we don't know what's going to happen in the next 10 years. So you can agree to continue coverage or to purchase an extended reporting period if your firm is no longer operating. When the client asks, for instance, we want you to insure, have professional liability insurance that applies to this project and to buy an extended reporting period for this project, that doesn't happen under a practice policy that a professional liability firm carries. Okay. So those are just some of the things we see. Let's go on and talk about some new risks that you're going to be facing. Cyber liability exposure is something that is growing. Many of you have probably already had ransomware attacks, or hackers that steal customer account information, things that destroy your website or disable your website. Those are things that are happening. You need to have the internal procedures in place to prevent them or to restore your systems, and you probably need some cyber liability coverage. One of the attacks that we're seeing now is not just the ransomware attacks where they freeze everything you have and you either pay, usually futilely, or you try to restore your systems. Now we're starting to see more sophisticated ransomware attacks where someone will contact you and tell you that sometime in the past they changed something in the design parameters for a project you're working on, or perhaps in your actual design. They may suggest that perhaps the structural engineering has been changed on the project. And your options are either to go back and check absolutely everything or to pay a ransom. So be aware that these things are happening and have your systems in place, robust systems to keep people from hacking into your system. Now, there's a number of things that happen with cyber liability coverage that you should be aware of. One is the whole breach rectification coverage, and that really restores operations and protects your reputation and your brand. And often that includes digital asset loss, the documents you lose, business interruption coverage, and provides a data breach team to help you find out where the problem is. So when you're talking with your insurance broker, ask about things like breach rectification, as well as breach liability. And breach liability coverage can cover any number of things. It can cover your website media liability. If you're taking payments by cards, it can cover that. It can cover some of the regulatory requirements if you're hacked into and you have to notify people. So again, breach liability coverage is a term that you always want to discuss with your insurance advisor. There's digital crime coverage that most cyber liability policies, but not all cyber liability policies cover. And that can be things like the transfer of funds through electronic means. Someone may, in fact, change something in a subcontractor's invoice so the money goes to somewhere else. There are plenty of examples where people will tap into your phone line and sell your phone coverage, often on an international basis. Cyber extortion coverage, again, holding your hostage, and deceptive transfer, meaning that again, money may flow out of your system or money that's supposed to flow into your system goes elsewhere and goes into somebody else's pocket. Again, digital crime coverage is something that you need to be well aware of as you're asking about cyber liability coverage. And one of the things that I think is very important is, you don't only want insurance coverage, you want some response. You want some ability to really have someone help you in responding to a cyber liability attack. And the cyber protection policy package that we sell does that. And the breach response capabilities include forensics, finding out, what really happened, legal advice, going through an outside attorney so that information is protected. And the breach response system and the Schindler Cyber Protection Package really provides risk management tools that I think can be extremely helpful to you. Now, with that, we do have the one question that I want Kevin to answer, and that's someone asked about project insurance coverage and how that differs from your normal practice policy, and is it available, and what are the specifics of project coverage. So before we close the program, Kevin, could you talk about project coverage?
Sure. So the main piece between the two is for a practice policy, which is generally bought by the firm, that's providing coverage for the firm's liability and the performance of their services, or to the extent that they're vicariously liable for those they hire. But it's a broad term policy for 12 months for all projects and services that you're providing. A project-specific policy provides coverage for only one project, so it's dedicated to that particular owner and project. It's issued for the period of time, generally from the inception of the policy through the substantial completion date, and then usually has a pre-negotiated extended reporting period to allow time to report claims resulting from that project. Most importantly, it's geared to cover the design team in totality, which means if you are the architect or engineer as the lead designer, any of your sub-consultants that you utilize on the project would all be covered either as a named insured or as a additional insured under the policy. In that way, all the professional services rendered to that owner would be encapsulated within that policy. From the owner's standpoint, they tend to like that because there's dedicated limits specific to their policy. Once the premium's paid, it's non-cancelable, so it allows for the coverage to continue through the length of the design construction period and for the pre-negotiated time frame. And then from a client standpoint, from an insured standpoint, that loss experience is separated under that other policy, so it doesn't affect your practice policy.
But one question is, how often are there project policies, and what kind of projects do project policies?
Yeah, there's a lot of project policies, but at the same time, within the scope of construction values and construction being built, it's a fairly small percentage. What we find is they're typically geared to the larger project, not wholly the rule, but usually over $50, $100 million is where we start to see that more, maybe more heavily related to infrastructure, so highway projects, bridges, roadways, etc., or public clients. But we do have some hospital groups, private companies, or others that have bought into the concept, around that. So there's not a real rule around project type necessarily, but I would say that civil engineers probably see this more readily because of Department of Transportation or other highway infrastructure projects being built. We also don't see a lot of delineation between the type of contract, but design build or integrated project delivery or P3 projects, I think, are more heavily represented from the project insurance side. The unique nature of those contracts, we haven't seen a change of the dynamic from the standpoint of the coverage that's needed or how it's addressed. But generally, when you've got more complicated projects or that element, they tend to be stronger buyers of that particular agreement. I think most insurers will find themselves as participants in those policies rather than driving the need for those policies. But again, engaging with your insurance professional around the impact or how to get a better feel for what you're agreeing to is a good first step.
All right. We thank you for attending the webinar, and Kevin, I thank you for your comments.